It is no news to anyone that crypto is taking over the modern currency system. Throughout the last decade, its value has changed drastically, Bitcoin having the most volatile trading history. The cryptocurrency's first price was $0.0008 in 2010, and we are all aware as to what extent it has risen in the last few years. Nobody would have imagined that the value of the currency, which was way less than $1, would have jumped to almost $50,000. From the earliest days, people would invest a lot in cryptos, and obviously they've seen a lot of success. But what if one day the crypto gets destroyed and it loses all its intrinsic value? In today's video, we will talk about what you should be doing when the crypto market crashes. Before we get into the video, don't forget to leave a like and subscribe to the channel with notifications turned on so you don't miss any of the new videos we post. First, in our video, we will talk about the possible reasons cryptocurrency may crash. As we already said, this digital currency has seen some drastic fluctuations over the last decade. Currently, there have been some unfortunate updates for crypto investors. According to the latest changes, crypto is in a bit of a downturn. There have been some drastic drops with Bitcoin and altcoins losing about 30% of their value. This made people wonder whether this is just a sell-off, a temporary tantrum, or the worst, a crash. Nobody can really tell what the path of all this is going to take in the future. Whichever that is, this kind of downturn made people consider the serious threat of the crypto market crashing. Now we will talk about the reasons behind those recent changes. The recent crisis may be attributed to many causes, and some of them may be serious enough to threaten the future of the market. Generally speaking, the market crash is a rapid process and is characterized by a sudden drop in the value of the currency. Regardless of the underlying reason, this kind of crisis is generally worsened by the massive public panic, which lowers prices even further. Here are some of the reasons why the market may be crashing. 1. China's influence in the crypto crash. It is important to state that most of the mining pools are in China. There are maybe about 20 or more major Bitcoin mining pools concentrated in China. Chinese pool controls about 76% of hash power, so you can imagine how much of an impact it will have on the whole crypto market when China makes any minor changes in the system. China's regulators made recent decisions last Wednesday to restrict some of the crypto activities. Banks and online payment channels will not be able to offer clients any service that involves crypto. This is a drastic hit on the digital currency. Boris Schlossberg, managing director at BK Asset Management, said, although China represents as much as 75% of all Bitcoin mining, the Chinese government is clearly averse to seeing Bitcoin's rise in popularity as a medium of exchange. Instead, Chinese authorities are keen to see their own digital currency in the form of the yuan become the primary unit of account in the Chinese economy. 2. Elon Musk's tweets. We all know who Elon Musk is. The 49-year-old entrepreneur is the founder, CEO, and chief designer at SpaceX, investor, CEO and architect of Tesla, founder of the Boring Company, and co-founder of Neuralink and OpenAI. It is safe to say that Elon Musk has a complicated relationship with cryptocurrency. It has been changing over the years, just like the crypto market itself. Since the very first appearance of crypto, Musk was very skeptical about it. He had a major influence on recent changes in crypto value. Here is what Elon Musk had to say about this matter in his tweet he posted on May 13, 2021. Tesla has suspended vehicle purchases using Bitcoin. We are concerned about the rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. Cryptocurrency is a good idea on many levels, and we believe it has a promising future, but it cannot come at a great cost to the environment. Tesla will not be selling any Bitcoin, and we intend to use it for transactions as soon as mining transitions to more sustainable energy. We are also looking at other cryptocurrencies that use less than 1% of Bitcoin's energy transaction. Musk is a very influential person, and it's only natural that his word would change the flow of the digital currency. 3. Seasonality. According to the critics, the reason behind the sudden drop of value may simply be the timing of the year. Sell in May and go away is an axiom used in the crypto marketing world. In the digital currency system, it is common to sell off the holdings before the end of May. It is not news to miners and investors that the market activity usually slows down whenever summer holidays are near. Based on the historical data we have, it is safe to say that overall market returns are systematically much lower during the June to October period. We're not saying that seasonality volatility is the main reason for the recent changes, but it most certainly contributes. These were some of the reasons why crypto may be crashing. Now let us talk about the tips on how to deal with this kind of situation. First of all, it is important to stay calm and not make rapid decisions. People tend to invest a lot in cryptos, so whenever anything goes wrong, they start to panic. This is natural, but make sure not to make any drastic decisions without cooling down first. Take some time, evaluate what is happening, try to find some explanation. What if this change is only temporary and will work itself out? Here is what ADVFN author Azif Mustafa has to say about this matter. Try not to obsess. Sitting in front of your screens all day is not going to change anything happening in the markets. Spending time making analysis and plotting charts is fine, but don't waste hours obsessing over the predicament you might be facing. It is advisable to engage yourself with something more constructive. However, if you still have to trade, select a limit order and move on to something else. Do not lose focus of the main aim. The fact that Bitcoin may be facing a crash at a time does not mean that the overall demand for Bitcoin is gone. It is usually just a temporary downturn. The crypto market possesses the most assorted investor base of any other sector. It is safe to say that the market will almost certainly bounce back. Always adhere to your trading strategy. Do not let the current situation drive you to make drastic trading decisions only for the market to turn around days later, causing you further losses or opportunities. The crypto market is an extremely erratic playing field, and huge plunges and rallies are always expected. Buying the dip may also be a good option. Some investors believe that getting the dip may be very profitable in this situation as it can generate compelling returns. Sure, it does sound like a good option, but in reality it is much more complicated. According to this strategy, investors should be able to time the market, which is quite challenging. Yazan Barghouti, project lead at blockchain company Jibril Network, says, buying a dip in a crash can be difficult because when do you know it has bottomed out? So as you see, not many critics actually approve this method. COO of leveraged digital currency platform Whale Club, Peter Zivkovsky, also spoke about this topic. Buying the dip only works in a general bull market. If the global trend reverses, buying the dip is useless. Zivkovsky also said that investors should never assume that Bitcoin will always rise in value. It may lead them to failure. There are also other strong opportunities that should be kept in mind in this situation. Every investor should remember that even if big cryptocurrencies crash, some of the digital assets could still hold up. Founder and CTO of Coinsetter says, just like the Nasdaq bubble, there will be companies and tokens that go on to be very successful, perhaps a future Amazon. CEO of Civic, Vinny Lingham, says that every investor should find quality coins with teams you can trust to execute and weather the storm. Some critics advise that flocking to fiat currencies may also be a good idea. Tim Enneking, the managing director of Crypto Asset Management, says that his company usually uses this method when digital assets drop. The founder and CEO of SWAT Exchange, Marshall SWAT, says that this approach is not as easy as it sounds. Exiting to fiat requires that you be able to time the market, both when you can exit and again when you return, he said. The smartest strategy is to allocate money you can afford to put at risk, and then stick with your plan regardless of the variations in the market. Shorting Bitcoin is also an option in this situation. Let us see what the financial writer and editor Charles Boviard has to say about this matter. If done correctly, traders can generate very robust returns by shorting Bitcoin, an opportunity offered by many exchanges. Bitfinex, Poloniex, and Kraken all offer this functionality, noted Enneking. However, shorting is a strategy for more sophisticated investors, asserted SWAT. This approach is very risky, he noted. Before using any strategy in an effort to profit from a market crash, investors should be sure to perform their due diligence. On this note, we end our video. These were just some examples and tips of what to do if the crypto market crashes. We would all like to know your opinion about this topic. What would you do? Do not hesitate to leave a comment down below and press the like button if you enjoyed the video. Thank you for watching, and see you in the next video.